Hey, good afternoon, traders. This is Trader Tim from eminimine.com doing a trade recap. Today is the 4th of February, 2021. The question did come up, why do I do the recaps here on Thursday and not Friday? Simple reason being that usually after I'm done trading Friday, I'm off to do other things, whereas Thursday, I'm usually, still focused here in the afternoon and can knock it out. So, I don't want to miss Friday and not get it done, so that's why I do them on Thursday afternoon. As far as our ES bigger picture, you can see these lines here are unfilled gaps, and today we filled our last gap that was above us, 38.51, and there really was not any resistance above us at that point, and off to new highs we went. And so I'll get rid of that one once we get the settlement here. I'll mark today's close as a gap, but we're really off to the races now. I've got a channel drawn up on my SPY chart, you can see a little bit of a decline in volume here on the move up. I'm not overly concerned. But one of the reasons is because we do have this inverted head and shoulders forming. If you look at this as the left shoulder and then this as the head, if we were to be met with some resistance here again at the top of the channel and dip, and let's say even if we came back to the bottom of the channel, that could round out and make another shoulder and then send us above the top of the channel and sort of projecting to like the distance between this channel, if we just kind of eyeball it, something like that could take us up here above the top of the channel in a definitive manner. With the way things went today, I would not be surprised if we just continued into new highs, blowing higher as opposed to getting that dip. But it's certainly a possibility. If we look at where we came up from, we had the bearish day back here, and then it was gap up, and then today pretty steady rally all day. So let's take a peek at the ES and go to the intraday chart. I'll start with today just because it's fresh in my mind. There are actually a lot of setups today. After we had, if I go back once more, after we had this gap up on the second, um, I'm starting to think, okay, we're gapping up, we're coming off of lows. There is some pretty strong buying up here. I mean, relative to the trend, we've come up quite a ways. So we are looking pretty strong. Yesterday, didn't really do a whole lot range wise. But today, going into today being so close to new highs, I came into the day with the um, reasoning that I don't want to be taking shorts unless we break lows of the morning and if we roll over. If we were to break, yesterday's high, we've got this little bit of consolidation here that can act as resistance, but there's really not much time spent there. And so I don't want to be fighting it up here at highs. So kind of being weary of shorts, and that was helpful today. So let's run through. I'm gonna get rid of these drawings here, and we'll start fresh. So if we begin with this morning, right at the open, the first retracement that you could really draw in the first 15 minutes was actually a short, and it did fail right, in the first 10 minutes. So just as getting a reference point of, okay, so if I put this is the open right here at the far left of my chart. This is the first 15 minutes of trade. Looks like this. And so not a lot of directional indication other than, okay, we have a break of the 61.8 of the short. If we turn that around and then draw up the long, in the first 15 minutes we can say, well, from the open to the close, or from the open to the first 15 minutes, we moved slightly higher. And if I pull back just a little more, we can pretend that we're like at exactly 15 minutes, and we can say, okay, we've really gone nowhere from the open to the first 15 minutes. There's not a visual trend, but we failed a short, and we have set up in a long. And so at this point, the long was holding. Obviously, this is a super messy looking start to the day. But by waiting those first 15 minutes, it keeps you from getting chopped up and not having any more bullets to use for later in the morning. So that long did get some legs underneath it and started to take us higher. So if we then go from lows to highs of, it was roughly 20 minutes into the day, we did have a pullback at the 50%. Now this one, buying the 50 on this one would have been a 38.36. So just by rounding up and adding a tick, and then with the 2-point stop, that does put you below the 61.8. So if you're ever wondering, like, okay, on the 512, I could draw a small setup like this, or I could cross a couple of highs and draw a larger setup that is then visible on the 5-minute chart. If I draw this tiny little setup, let's just say down here like this, I mean, on the 5-minute chart, I really can't even see it. So that's super micro. But something like this where, yeah, I could draw it up on the 512. I grab from lows to highs. It is visible on the 5-minute. But is it okay to take that? Technically, it's a 5-minute setup, or is it a 512 setup? Well, if you look at the distance between the 50 and the 61.8, and when you put your order out, if your stop is below the 61.8, it is technically a valid setup. And there was some support or some resistance back here that then had potential for acting as support, kind of these highs right here. So that was a first or one long entry. I didn't take this long here just because it was a little bit early, but that was our first real long entry for the morning. From there, we broke the opposing short and then set up in another little micro long. You notice we went 50 right to target, and then pull back to the next 50%. So same thing. Okay, I see a 50% retracement go entry to target, and it pulls back, and it goes from that entry to target, right here, to the target. Well, I can draw up the next retracement like this, and I can take that as my next long setup. And then look at how clean these were. Entry up to negative 23% target. So it's doing the same thing, kind of drawing the next setup. Well, at this point, we are 30 minutes into the day, so this gray line up here, it's kind of faint, but it's right at about 38.43.25. Now that was the high for the first 30-minute range. And then the next kind of break point was that 38.51 was the unfilled gap. So it's at this point that if we're going to reverse, it's likely going to happen around the top of the first 30-minute range. Like if we're going to be range bound, well, we can't trend all day and then call ourselves range bound. We have to drop back into the first 30-minute range, fairly quickly. We did get that, but there was enough of a move above the top of the first 30-minute range to where the pullback, we really didn't trade too far into the first 30-minute range. So coming in here, if we say, well, just strip away the fact that I'm not really interested in shorts today because of the daily context. Let's just pretend that this is a typical day where we're not really overly bullish or bearish coming into the day. Well, I would want to wait for a break of a swing low to draw up a short up here. And if we move above, so higher low, higher low, higher low, there was no break of a swing low to draw up a short. If we move above the top of the first 30-minute range, I really want us to come down into the 30-minute range enough so that when I draw up the short, the 50% lines up with that 30-minute range. So this guy was a little bit high, whereas if we were down like this, I like that a little bit better. But then, so moving forward a little bit more, we had this kind of a triple top, if you will. And this was a little bit of a tricky spot because this low to high, it broke at 61.8, but it didn't really trade at the 50%. It was just sort of almost like a bull flag up here. And at the time, I'm kind of keeping in mind, okay, where is the full halfway back for the day? Because we had pretty much gone straight up. Look at the 5-minute chart. From here, we do not, at all break the prior candle's low. Every single candle makes a higher low. So at some point, we're going to make a pullback. So taking from the low to the high of the day, just to get an idea of where that is, that was just inside the first 30-minute range, but it was a 39 and a quarter, and the top of the range was a 43 and a quarter. So with this as a potential short, you run into the trouble of, are we going to get support off of the top of that first 30-minute range, or can we get enough short-term selling to take us to the halfway back of the day and then have the buyers come back in? So don't feel bad if you passed on this short. It was really the only short that had any legs today. So if you were taking shorts all day, there's a good chance that you'd have a couple stop outs in addition to this, winning trade. And then from here, this halfway back, we kind of stayed there a little bit longer than I thought we would. This was an hour into the day. We got our touch, but then we just kind of chopped around for about 20 minutes. And so this the halfway back long, it did hold its 2-point stop. We came one tick away, and then it did end up getting a nice breakout and running all the way up just shy here and here, but then finally making it to its negative 23% target. But, all of this undulation, you got to just, leave your stop alone until you get that breakout. Don't be coming in here and saying, well, I started with a 2-point stop. We came down one tick away, so I'm going to get out as soon as it moves back up to break even. Like, you got to be comfortable. Accept that loss at the start. Close your eyes, pretend that you got in the trade and you were immediately stopped out. Okay, am I comfortable with a 2-point stop trading X amount of contracts? And if you're trading 6 contracts and that starts to make you feel uncomfortable, go back down to 4 or 2 to where you aren't sweating and nervous when you get into a trade. And so then that long really took us up to the end of the session. On the way up, we had this little fake out. So this was the current high of the day, and then we had this. It wasn't exactly a double top, but it was close. And then this wasn't exactly a swing low, but it was close. And we had this little short here. If you're in the long, it's not a big deal because you're not going to be taking a short if you're already long. But it got a test for just a few seconds, and then we went higher. But that was at the time it seemed like, oh, are we gonna roll over and kind of double top on the day? But as you look back on it, you can say, oh well, pretty clear uptrend. But it looks a little bit different in the moment. So that was today, and then I just want to run back to yesterday real quick. One thing for Tuesday, you can for those that are VIPs, you can find the whole recording of the live trading session for Tuesday in the dashboard. So I'm not going to review that. But if we go back to yesterday, you notice how I'm using the 5-minute chart over here on the left. And when I see these big reversal bars, like a hammer at lows or a inverted hammer at highs, you can come into that time period, which was about 8:30 my time. And when you break above that candle's high on the 5-minute chart here, when we get that move up, that can help validate, taking a long that looks something, let's see, where was it here? That's the second. There we go. Looks something like this. So this is the same low to high that breaks above this hammer. So you can kind of use the 5-minute candle patterns as a way to say, well, that's a bullish situation or pattern on the 5-minute chart. Let me come in here and take a long on the 512 tick chart. So there was that long later in the morning, and then if I back up, there was a low tick of the day, and it was 7:54 my time. Is that right here? 7:54. Why can't I find it? Pull up here. 54. Why doesn't that look right? Oh, 8:17. That's why. Okay, so 8:17 was here. And this was the first low tick that lined up with low price. We broke the swing high. I did take this one and was stopped out. But then what happened is on the move down, we continued to have low ticks at low price for just a minute or two, and then we would make a new low price. So sometimes what ends up happening is you have to take, you know, you take a stab at a low ticket lows or a high ticket highs, and a lot of times you do get a big reversal, and that's great. But if you do get stopped out, I don't continue to try buying up the following low ticket lows, because what happens is you go into this trending situation where it's just low ticket lows for 30 seconds or a minute, and then we roll over. And then if you just keep doing that at lows, you're just going to burn yourself and give yourself a huge hole to dig out of. So there was that long there that was a low ticket lows that was a stop out, and then later in the morning here, the long setup that traded actually super cleanly right up to its negative 23% target. So that was yesterday and today. Remember, we've got those all-time highs coming into play, so I would want to see some sort of bearish signal on the daily chart to really be able to initiate some intraday shorts again. If intraday, like if tomorrow we just put in one of these real little doji candles, yeah, there might be some shorts that work out, but we're talking about a really small range. So you might get in a trade, it goes 2 or 3 points, and then it reverses. So sometimes if we're range bound, it's not worth fading highs and lows if the range isn't big enough. So I'd rather just sit on my hands until we get a bigger break. So if you like the video, give it a thumbs up. And if you have questions, feel free to drop them in the comments below. Thanks. I hope everyone has a great weekend, and we'll talk to you soon.